Hello, investors and tech stock enthusiasts. Today we are diving deep into Navitas Semiconductor, ticker NVTS, a bold player at the edge of innovation in GaN and SiC power technologies. With ambitions spanning AI data centers, electric vehicle, solar power, and beyond. The big question is, could NVTS be a future compounder for high-conviction portfolios? Let us break it down. The latest stock developments, fundamentals, technical entry zones, and most importantly, Navitas' long-term strategic vision. Latest stock movement, the calm before the storm. Navitas recently stirred attention following its Q2 earnings, which missed expectations and included a cautious Q3 outlook. The result: volatility. Investors exited. The stock dipped. But then, Navitas quietly announced $450 million in design wins across EVs, AI servers, and solar inverters. These are not theoretical. These designs are transitioning from prototypes to production. A move that could power serious revenue tailwinds starting late 2025. And here is a bold signal. An insider purchased 18.6 million shares in 2025. That is not speculation. That is conviction. Fundamentals, reading between the numbers. Yes, the current picture is not pretty on the surface. EPS is negative at 0.25 non-GAAP. Profit margins are at negative 182%. But context matters. This is not a mature value stock. It is a high R&D, high potential tech player. Think early Tesla or pre-earnings NVIDIA. What is holding the floor? $161 million in cash. Zero debt. Break-even EBITDA targeted by 2026, once quarterly revenue crosses the 30 to 35 million mark. The balance sheet is solid. The roadmap is clear. Now comes execution. Strategic vision, playing in trillion-dollar sandboxes. Navitas is not just building chips. It is positioning itself at the heart of tomorrow's energy and compute infrastructure. AI data centers. Their high-power GaN and ICs are tailor-made for the growing electricity demands of next-generation AI workloads. Smaller, faster, cooler. Exactly what hyperscalers are hunting for. EV market. Navitas' GaN and SiC components are winning designs in commercial EVs and e-mobility platforms, where charging speed and energy efficiency are essential. Green energy. From solar inverters to smart home systems. The energy transition demands compact, high-voltage solutions. Navitas is already there. Manufacturing efficiency. Navitas is working with foundry partners to scale production on larger wafers. A shift that could push gross margins above 50% long term. And the big picture, their total addressable market is massive. AI, EVs, clean energy data centers. All trillion-dollar arenas. Navitas is not betting on a trend. It is betting on the future itself. Technical setup, risk reward, and entry points. Let us zoom in on the stock. High volatility. Ideal entry range is 6.99 to 8.10. Aligned with historical support and recent institutional buying. Short-term targets lie between 8.50 and 9.28. A clean break above could spark bullish momentum. Below 7 is the caution zone. A dip there might trigger sell-offs, especially from short-term traders. Analyst sentiment still under the radar. Wall Street opinion. Moderate buy. Price targets range from 4.50 to 8 or more. But here is the nuance. The bulls are not buying the numbers yet. They are betting on execution. On Navitas converting design wins into market share. And market share into profits. Final verdict, is NVTS a buy? Let us recap. Pros: cutting-edge GaN and SiC technology, built for AI, EVs, and renewables. Strong cash position and no debt. High-profile partnerships and real design wins. Clear path to break-even in 2026. Risks: deep negative margins for now. Revenue weakness until production scales. Competitive space with high execution risk. But for long-term high-risk, high-reward investors. NVTS is not just another chip company. It is a potential cornerstone of the future energy economy. If you are looking to invest in the infrastructure, powering AI electrification, and clean energy, Navitas might be your sleeper stock. What is your take? Future compounder or overhyped underdog? Drop your thoughts in the comments. Like if this helped clarify the story. And subscribe for more serious data-backed stock deep dives. This is not financial advice. Always do your own research.